Good morning, Flow Showers. Welcome to the Flow Show. Here we are, a bit of a sort of impromptu US holiday for the passing of President Carter. So it's going to be a quiet one, perhaps, this afternoon, particularly in the US. But there's been plenty going on this morning. If you've been up nice and early like the rest of us, particularly what's going on in the UK. So we'll go through all that shortly. We'll get through some of the other news items first. As we always do, kicking off in China, PBOC still keeping those fixes pretty tight. 718.86 down from 718.87 yesterday. Not such good news on the data front. We had some CPI data, PPI data overnight, all coming in pretty flat. Was expected year on year to come in at 0.1%. That still doesn't make it good news though. So as of yet, there's been no real reaction in some of the data like inflation to the easing so far. It's going to take a while for some of that kitchen sink throwing from the latter part of last year to feed through properly, if it does at all, if it's enough. So never expect instant results when a country cuts rates. You don't get an instant reaction in data like CPI. But even so, the trend is still very weak for inflation over there in China. Over in Japan, the BOJ report on businesses or regions has raised its assessment for 2 of Japan's 9 regions. Separately, the BOJ say that some firms have said their wage hike levels are still undecided coming to the new spring wage negotiation period. They say that there's also cautious views on wage hikes among smaller firms, and that's been something, again, the government have been looking at as well. It's okay, big firms raising wages, but the smaller firms need to do the same as well. If they're all putting in the same direction, then things will look pretty good for the economy and the BOJ. Speaking of wages, we got some wage data out from Japan, November data. Cash earnings were up 3% versus 2.7% expected year on year, so a nice beat there. Overall wage income also up at 3% versus 2.2% prior. Overtime pay as well up 1.6%. So nice healthy numbers. What has closed a little bit is the real cash earnings year on year. They've been running a bit negative. They were flat last month, but that got revised down. Came in at minus 0.3%. So still a negative. And I think if you're going to look at something to help you with your thoughts about the Bank of Japan, look at these real wages. I'll just see if I can get the chart up while I waffle on, because real wages, that's obviously if you strip out inflation and everything else like that. So if you've got positive real wages, that's obviously a better situation for the population. Let's just bring that chart down there. And so this is the year-on-year real cash earnings. As you can see, they've been largely negative for quite some time. And this is what they want to turn around in Japan. So if we start seeing a trend into the blue, into positive numbers over the first quarter of the new year, that will give the Bank of Japan something to jump upon and potentially lead them to being maybe a bit more firmer on their hike rhetoric. So it's a good number to watch if you follow Japan and what the BOJ might or might not do. Moving on to Aussie land, we had retail sales there coming in at 0.8%, a miss on the 1% expected, a bit better on the trade balance for November, a decent uplift in exports 4.8%, and even imports rising as well. So good bit of activity going through. That won't get RBA doves squawking too loudly about rate cuts, seeing a better trade balance there. But retail sales positive, but not as much as expected. Over in Germany, we have actually seen a positive number, a couple of positive numbers, improvement on their trade balance as well. Looks like a lot of that was down to a significantly lower amount of imports, even though exports were positive as well. Industrial production coming in up 1.5% on the month as well. Retail sales in the Eurozone look a bit weak in this what can be a potentially one of the busiest retail periods of the year. November retail sales up only 0.1% from 0.3 expected. We obviously saw that pretty shocking German retail sales number yesterday. That will be feeding into this pan-Eurozone number as well. ECB's Villeroy says ECB rates are still significantly above neutral. He says if inflation pulls back and is confirmed, ECB's rates will head towards neutral by the summer. The ECB estimates for a neutral rate is close to 2%. Says it makes sense for the ECB not to slow the pace of cuts. Mr. Villeroy has been one of the big victory lappers over getting inflation down, and you might get a kick up the arse in as it's done nothing but go up for the last couple of months. So he's not out the woods yet, but he's certainly been doing victory laps in the latter part of last year. Over to the US data from yesterday, we got some odds and sods in the jobs data. ADP number came in, small miss, 122k, but still a positive number. So nothing really to get the market worried about anything at all. We also got jobless claims, which looks pretty good, dropped to 200,000, with the continuing claims still sitting around that 1.8 area, but a bit lower than expected, although it was up a bit on last week. So still nothing of note in the jobless claims numbers to get anyone worried. So no real changes I expect for NFP on Friday. US consumer credit had a surprising drop. If I can find it, here it is down here somewhere, always comes out in the evening. Came in down 7.5 billion, was expected to rise 10.3 billion. Now, it could be a bit of a wash around because we had some big numbers previously, so it could be a bit of a washout. But again, coming in the month that it did, Thanksgiving, all those Black Friday sales and whatnot, you might have expected to see a positive credit number, but it looks like people were paying down credit, particularly on cards, credit cards and the like. According to report, there was an increase in non-revolving credit. That's things like car loans, house loans, that sort of thing. And that was likely due to very strong auto sales in November. They rose at the fastest pace in more than 3 years. So not a bad thing to see lesser credit unless borrowing costs are becoming too high that people don't want to borrow money. You always need a good amount of credit going through, but all in all, there's no red flags being waved there by US consumers. If we start seeing credit numbers growing and growing and growing, that suggests finance problems. People turn into the plastic more than their wages can perhaps cover. What else we got? We had Mr. Waller out yesterday as well, and a bit of a change in tone, quite dovish from him. He said that long-term yields may have more of an inflation premium, but said the Fed will fix that. That was the first striking comment that he said. You could take a lot of connotations from what he means by the Fed will fix that. Doesn't necessarily mean any sort of interventions in yield curve control or anything like that, but it's still a comment that raises the eyebrows anyway. He says US deficits may also be driving long yields higher. On the subject of rates, believes more cuts will be appropriate and that current US rates are restrictive, though not tight enough to cause a recession. So it doesn't look like he's one that's in the pause side. Maybe temporarily, but he still favours further rate cuts. Fed's Collins is on the other side, favours more patience and fewer rate cuts in 2025. Later yesterday evening, we got the FOMC minutes. within those, the majority said that the judgment on the decision at the last FOMC was finely balanced. The vast majority said it was appropriate to lower the benchmark rate. Participants expected to move towards neutral over time, but almost all saw increased inflation or increased upside inflation risks. So that's what's tickling their boat at the moment. They're worried about inflation, more so, as pointed out, than the likes of the ECB, who see this as not much of a problem, this rise in inflation. Well, the US odds over there see it as a bit more of a risk. So they're going to take that cautious approach, moving towards pauses and whatnot. Mr. Trump says he's considering a national economic emergency declaration to allow for his new tariff program. That's basically him saying he wants to get a fast track measure through when he sits in and wants to slap all his tariffs of anyone. He doesn't want them getting dragged through the houses, held up and whatnot. So he's going to get his book out and write his declaration and print it and then show it for everyone on the telly. So don't forget to follow Trump Draws, which was a great Twitter feed that we had during his last presidency, a real parody of all his declarations. That's it on the headline front. Let's see what you're up to. Ali, you're in and out, you're in and out. What do you do with cable in the end? That's my first question. Seeing as we're now sub 2123s, I hope you're holding on and didn't get out too early. Sort of a bit like I advised yesterday, see if you could push the trade as much as possible. You're now short in US dollar. Let's go over to the good old US dollar, Japanese yen for the little look-see. Right, so what's been going on? We've still got this uplift in yields, okay? The UK is still getting hit more so than others, but I'll get to that in a moment. We had dollar yen running up yesterday, pushing up above this 158, getting up to near 158.60. It's had a little bit of a come off, some of that wage data helping overnight as well. Just brings the BOJ focus back on the table for a bit. We had a little dip under that 158, but we're back above it now. We need to see if it's going to hold it here. So shorts, yeah, you know where you need to get under, Ali. You need to be back under 158. Maybe, I don't know, you're short a bit close to that, a bit of a level. But as I say, if it gets under there, then that might be enough to take it down through these lows. I'm still a little bit long. I shifted up my stops yesterday, just under this area here. So if it does drop back, I'm locked in the rest of my profits, but also got out some of my long up here in 158.50s. So I'm all fine and dandy with that one. But yeah, we've still got this late phase uptrend going on. Bit of a shallow one in terms of what we've seen previously, but the momentum is still there. Maybe just wearing out a little bit. We've obviously got this holiday, so we might see just a few feet coming off the gas pedal for this one. I still favour the long side as a bias because there's nothing, unless yields really turn around in the US or the economy starts falling off a cliff. I can't see any reason why the dollar doesn't remain on the bid side of things. Right, coming over to the UK, because as mentioned, cable had another battering this morning. Gilt yields, let's go, I've got them here, UK 10s. Gilt yields opened up a big old gap first thing this morning, right up here, opened up 9 pips, went shooting up to the 490s. They've eased off since. Cable obviously dumped off with that as well. We're still sitting pretty heavy. Reeves is facing questions from MPs about what's going on in bond markets. We did have the Treasury out yesterday with a load of old guff. Remember, the Treasury is part of the government, so they just brushed it all under the table, said it's nothing to worry about. And as Gavin's just pointing out there, we've had Treasury Minister Jones say it's very normal for the price of gilts to vary. So they're doing a bit of a rug brush on what's going on here. Now, this is where it potentially gets a bit dangerous. Okay, it's normal for gilt yields to move. It's normal for all yields to move. It's not normal for things to go in a straight line that fast, that quickly. Okay, this is a big old bounce up. Okay, it's not Liz Truss sized, neither in volatility or the amount it's jumping, but it's getting close to there. This shouldn't happen in bond markets. Okay, it's a sign that there's a lot of nervousness out here. Now, you can throw several reasons at this. Okay, this has obviously really just happened this week. It's been building a bit since the budget and since the government's taken over, but this has just happened this week. Okay, I think there's a couple of things going on. Firstly, I don't think Musk is helping. We know he's been tweeting about the government on other separate issues, nothing to do with finances or budgets or anything like that, but it's bringing a lot of eyeballs onto the UK. All right, so there's a lot of people who follow Musk on social media. There's a lot of people in America, other countries, who are reading what he's saying, and if investors are part of that bunch as well, they're thinking, what's going on in the UK? Is this a stable environment for me to invest my money in? And I think the decision a lot of investors are making, the answer is no. So that's why we're seeing gilt yields rise and the pound coming off. Because if you can get similar yields elsewhere, like the US, and there's less trouble going on over there, although that's obviously subjective given Mr. Trump coming in, but fundamentally, better economy, higher rates, higher yields, you've got less risk putting your money elsewhere, then what are you going to do? You're going to get out somewhere that's potentially blowing up and move yourself somewhere more stable, or you're going to stay and ride the roller coaster. So I think that's a bit part of it. We're seeing a bit of investment flows out of the UK just on all this crap that's going on. Domestically, talking from the UK side, there are a lot of questions being asked about Reeves and her policies. Okay, these moves in yields raise borrowing costs. It limits her ability, her what they call fiscal headroom. I don't know, you want to describe that as rainy day money, if you like, giving her enough space fiscally to allow things to happen. If your cost of borrowing goes up, it makes it very difficult to use that money that you're already earmarked, because now you've got to use it for paying off these extra borrowing costs. So it's becoming a bit of a stressful situation. We're not at crisis levels yet. I think we're quite away from crisis levels, but as is the case that we saw with Liz Truss in 2022, things can snowball very quickly. And because of that, there's several things that can happen. Firstly, we see this continuing, picking up speed, going on for a few more days. Then we could be heading for a potential flash crash moment again. Maybe not as big as what we saw over Liz Truss, but something a bit similar if it goes unchecked. However, what we need, or what should happen, is that we'll hear from the BOE soon. And I'm talking not from a monetary policy perspective, but from a financial stability perspective. We do have Sarah Breeden speaking at 4 p.m. UK time today. She's Deputy Governor of the FPC, which is the Financial Policy Committee, which is the financial stability arm of the bank. So maybe she's going to drop some comments into this scheduled speech. She's speaking at a university. In the meantime, I wouldn't be surprised if we get someone like Bailey popping up just to offer a few verbals. Okay, they have got various tools that they can use if there are big financial stability concerns, if there's a drying up of cash, if pension firms and the like are getting into trouble again and finding it hard to get access in the bond market and liquidity and the like. So they've got the same programs they used back then that have still been on the table since then, so they can step into those. But I don't expect any action to actually happen unless things get worse. But as I say, I expect to hear some verbals. So if you've been short in the quid, if you've been watching these yield moves, just know that there's that risk that we could get some official comments that might just ease tensions a little bit, and then you're going to see the pound probably ripping a bit higher. Doesn't mean it's all over, but it's just a bit of, as I say, verbal intervention. So just be warned for that. There's two sides risks to here, the snowball and the verbals. So just be careful for that. So in the meantime, keep an eye on these yields. I mean, I don't usually look at UK yields much except to give a cursory glance in the morning. I couldn't even remember what time they opened this morning. But now everybody's looking at them abroad and in the UK. So for the quid, cable getting absolutely trounced again. I'm just going to show you this bit of a clearer chart, bit of a wider look at things, just makes things a little bit clearer. So we've tapped down to the 38.2 fib of this move from the Liz Truss moment to last year's high. We did have a little poke below 122.39 we got to, but we're back above now. The bounce is looking pretty weak still though. Okay, we're below this 123. Now we're pretty much bumping our head on it on the bounces. So it's looking a bit similar to what we got yesterday when we had this move down and the bounces didn't get too far. So this is a bit of a 123 is a bit of a significant level, being that prior low from last April, 123, 123.10-ish. Really on the wider picture, it's all about this area, 121 to 120. These are the big old levels. These are the big historical levels that go all the way back and back and back and back. Okay, this is like the 105s in euro dollar and the like. Okay, big old time levels. We've been away from them for quite some time, so they are likely to have an impact if we come down here again. Obviously, depending on how we get down there, if it's some sort of mini crash or something like that, we're probably going to carve straight the way through. Okay, if it's a bit more slow and steady, if you're going to be looking to catch knives, this is probably the area you want to do it, somewhere from 121 down to 120. Okay, I'm potentially looking at that as a potential outcome. But as I've been saying for days and days and days, this trend at the moment is not for turning. There's no signs that this downtrend from the 134s is going to turn anytime soon. So just looking at it in shorter terms, as you can see, we had this move yesterday, similar. Bounces looked very, very weak. I was talking about that. Same thing happening today. We've had another leg down. Bounces are looking very, very weak again. We can't get through this 123. Okay, now we've all got bits and pieces levels up here, but the key level is 125. Let's just shift into the other chart, make it a bit clearer. Let's just pull that down there just to make it easier. So we have got a few levels. The thing with cable, you've got to know, some of the main levels tend to go around the big figures in the 50s. Okay, so that's where you get a lot of action. So, you know, 124.50 was a level I was talking about. Plenty of action there. Then the big figure 124, we carved through there, couldn't get close to it. 123.5, we just was turning around a bit. Then we held below it yesterday, and then we got the move down and whatever. So it's the figures and the half figures, pretty much. We had a nose under 122.50, couldn't stay there, back above. Okay, so you get these little extensions, but always look around these numbers. So we're resisting at 123. So getting back above there is a first little step. But really, all these levels are just little pieces unless we get back above 125. If we get back above there, then maybe something is turning around, at least for this phase from December. Never mind the bigger trend from 134, just from this phase. Back above 125, maybe something is changing. But I don't think we get that unless we get some verbals from the UK side, or we see something causing dollar weakness on the other side. Euro sterling, that's finally woken up. I was taking the piss out of this one yesterday, saying it wasn't doing nothing, and that bit me in the arse. Shift up to the 84 level, the old zone here, 84, 84.20. We've had a few extensions through that as well, but you get the picture. This is another long-term zone that we're back up testing. again, if we're breaking up through here, something is going on. Either we've got a continuation of these yield moves, or whatever, something's happening. I don't see why this should go up purely based on the European side, on the euro side, okay, because things are just as shit over there as they are over here. So this is all about the UK at the moment. Again, if we get any verbal interventions or comments trying to soothe markets, this will probably be heading back down just as quickly. But we'd probably find that unless any sort of comments completely change the picture, it's just going to be taking a bit of pressure off the situation. We might just pull back to some of these levels, 88, 83.70s, or this 83.40 area. I don't really expect us to be going all the way back down here unless things get totally resolved. So expect this to be a dip buyer, at least in the short term. But whether we can get through this 84.20 level is another question altogether. Right, let's go back and look at what you're going on, Ali. You owed the trade till 123.50-60 area. Okay, mate. Yeah, well, nice pips anyway. But today would have been a great day to keep a bit on the table, and you know, you could have got another 100 pips out of it. That's why I always say it. If you're in a winning trade, don't give up on it too quickly. You can always just lock it in with your stops and whatnot. As for your Bitcoin trade, that's all yours, mate. I'm not going to be looking at that one today. Dollar Swiss, you're in that one. Long at 91.90. I assume you mean 90.90? Oh, sorry, Euro Swiss. Hang on a minute. You're long Euro Swiss at 91.90. Okay, mate. 92.87. Right. Okay, gotcha. All right, that's not a bad trade. Been speaking about the levels up here previously. This 93, 94, 30s, 40s area. That's what you want to see breaking at the moment. That's a decent level up there. If you get a break there, that's not just another little fake out, then you're probably off to the races, mate. We are pivoting around this level as well, 93, 80, 90. So be careful with that one. Right, what else? Who else is on there? The reg, pound CAD. Blimey, mate. You do like pulling them on me, don't you? Pound CAD. I'm going to assume it's showing a pretty similar situation to, I've not even got any tickers on that one. Similar situation to all the other pound pairs, really. Not one I'm looking at. It's trading a bit similar to dollar CAD in terms of what it's been doing. Now I'm taking my fib from 2022 from that point there, because this candle was a bit wonky. I don't know what the real price is based on retail. So when you get moves like that, and I have to confirm it, I always take the first candle after the big sort of flash crash move, as that's more of a realistic price point for price history. But look at that. We've had a little poke under the 200 DMA, holding it for now. Derej, what are you looking to do in this one, mate? Catch the falling knife, I assume, or are you short, mate? Let me know. But yeah, we got you can probably stick a bit of a trend line in here as well. Yeah, let's take it from now, if I can. Oh, come on, drawing skills. Where are we? Oh, bloody hell. I'm making a mess of that again. So you've got a bit of trend line support coming in here just under that level as well. So it's a decent enough trend, and it doesn't look like it's breaking at the moment. You could do a fib on maybe this phase or even this phase here, and see where you're pulling up that. Let's do that quickly just to have a quick look. Just a rough one on that. So 175s is your fib on this phase here. So if we're staying above there, then it's going to keep this trend going. But for the top side, you know where that is. You want to be getting up to here, 181s, 181.40s. If you find resistance into there, then maybe we're not going to that high up there. So watch for that if you do get a bounce off here. But technically, it's still, even with this move, it's still in a very, very bullish phase. So that's probably not going to change anytime soon unless we start busting through some of those fibs. In that one, yeah, you're watching that 200 moving average. Just going to have a look at the Aussie because I've had a little nibble this morning in this one. Just because we came down to this support again. And I was mentioning, you know, we had a weak fake out here, couldn't get through that zone, so that kept the bearish picture going. And I said, if you know it keeps all this momentum going, wouldn't be surprised if we had a move down there. We tried pulling up short yesterday for a bounce, you know, decent bounce, 40 odd pips, 40, 50 pips, but here we are back down. We've gone through that low, okay, and what we've done is we've pretty much hit this low down here. Okay, so that was a bit of a safety net level there. So that level going back to 2022. So we pretty much hit that. And when we got back above it and above this level, I thought I'd try a little nibble long just to see if maybe that was just a bit of overkill. For now, again, it's all right. I'm up, what, 17 pips at the moment. I've already taken a slice for 10. I'm not expecting this to go shooting up to 63s. So I'm going to be a bit nimble taking profit. I did it with a tight stop at 65, just below that prior low. So it's bouncing for now, but we can't get back into 62s. So again, it still remains weak, very, very weak. If I see a move back up, maybe into 62, 62.20s, I'll obviously do a bit of slicing, but I'm then going to start pulling my stop up, at least get it to break even, start protecting the rest, and then see where it goes from there. And if it wants to have a look back up and develop a bit of a short-term range between 62s and 63s, then so be it. But I'm long, but I'm not expecting rockets here. And this break of this low is a bearish move as well. But as I said, this 61.70 level, a bit of a line in the sand. If that goes, as I've been showing, there's a bit of empty space down to 60, which will be a big psychological level as well as technical level down there as well. You're short in the Aussie, are you, mate? What Aussie dollar you're shorting? I don't know, I can't see if you pointed it out. Ikisola, your long dollar CAD. Let's have a look. Blimey. Are you a mate of Ali's? I'm having to do trade reviews all day long. Right, let's have a look at dollar CAD. Now, obviously, I've been speaking about this one this week as well. I was talking about, beginning of the week, this zone range that we've got here. Watch for the breaks. Had a bit of messing around. Again, it's just got back up into this zone. It's holding it. You are long at 143.43, so pretty much just above this level. So decent enough entry. 44.67 take profit. You're right on this level, mate. Well, you're just actually above these highs. Okay, you take profit. So you might want to be a bit careful with that one, putting your profits bang on levels. You're in profit, and I'll give you the same lesson that I give everyone else. If you get some profit, if you're in the middle of a range, then maybe you could think about taking some partial profits, okay, and then running the rest. So you're what? You're 40 odd pips up, 43 pips up. You're bang in the middle of this range at the moment, give or take. So, you know, do you want to see it going all the way back down here? Obviously not. So maybe it's sensible. Take a little bit off the table, reduce your risk down. I don't know how long you've been following us here on the Flow Show, but when I trade, my first objective is to get my risk to zero. forget profits. I want my risk at 0 first. Then I worry about profits after that. So you've got your take profit right on that level. What if it comes up short again? We've had several times where it's pulled up short of that high. Okay, so just think about that. If you are going to wait for this upside, you may again take some profits off a little bit before that. You know, up here you've got 100 pips odd in profit. Take a bit off in case we don't get to that profit target level. You know, you can take off a third, a half, or whatever, because if it doesn't and it comes all the way back down, at least you've banked some money. Plus, you've also still got a bit on the table if it goes onto your profit target, or even if it breaks it, you can then sit in it and ride it a bit. But I'll be a bit careful having your profit target a pip, give or take, above where the actual highs have been recently. Okay, you don't want to miss out for the sake of 2-3 pips getting your profit. 43.70 is your entry point. So you're all right. You're in here, around here, and again, your stop is at 43.43. So that's just above this line. Okay, you don't want to get stopped there, and that's where it bounces. So again, think about maybe what your stop placement. You know, this is a pretty clear level here. So if you want to have a stop, you don't put it bang on a level. You maybe drop it a few pips under, maybe 35s or something like that. If, you know, you can stretch your risk parameters to that. But just be careful putting your stops and your take profits on defined technical levels, because sometimes, you know, you get stopped, as I say, it doesn't get through, and then you think, shit, why did I get stopped out there when I should have had my stop just below it? Okay, another little lesson for you. First time on the show. Well, I hope you enjoyed it, and yeah, you'll get lots of that. And Ali knows. I'll keep telling him all about that. Others as well, Bran and the rest. Just, I want to just help you guys not make rookie mistakes. And that's not me, you know, deciding how long you've been in the industry. I don't know how long you've been doing this, but you know, it's these sort of little things that people do, and it impedes them from making good profits. Okay, you can obviously make profit trading the way you do, but as I say, if you find yourself getting stopped out and then the price then goes your way, if that happens a lot, you need to change that habit and work out why that's happening. So that's why we never put TPs and stop losses bang on levels. You either do it a little bit below on a TP or a little bit below on a stop loss, depending on which way you're going. Okay, it's exactly the same as what I've done in Aussie dollar. Okay, I'm in at 82. I haven't got my stop bang on that level there. I've got it 5 pips under. That's not a lot. It might still get pinged, but look what happened. It pulled up just shy of that level. Okay, so if I had my stop on that level, spreads and whatnot, I might have been knocked out on the stop, and then it's bounced again. So never put your stuff on technical levels. Of course, your charts are your own. You might have different levels to me. All right, Ali, let me get on there. Gold. Otherwise, I'll have Derege on my case as well. And look where we are. We've had a couple of goes getting up here. Couldn't quite make it. Now we're tapping on this 26.70 level. As I've been saying, I don't see any reason why we should be rocketing back up. This is, you know, very slow at the moment. You know, $40 over the course of, you know, this year so far. Pretty tight range compared to what we've seen going on previously. I don't think the market knows what it wants to do exactly with this one. But if we break through this 26.70 level, then we're probably going to have a look at the next one, 26.80s, and see from there. So again, if you want to be getting long this and you're not getting a dip, then possibly wait for a break. Wait for a break of 26.70. You don't have to trade that initial break. You can wait for a retest. Maybe it goes to 75, comes back to 70 and holds. So if you're not long, that's the sort of price action you could look for. Keep it very tight. If we're back below 60, the trade's wrong. If you're short or you want to look at shorts, then, you know, we've had a couple of goes at this level. So you could try shorts off of this as well, but be mindful that this short-term uptrend is looking pretty strong. So right here and now, this very minute, I'm more inclined to think we break than hold. But if you hold, then you're going to see probably a lot of short-termers getting out, and then maybe you get a pull back to 50s or something like that. But from here, yeah, I don't know if we're going all the way back to the highs or not. It doesn't feel like it's doing that. It wants to do that right this minute, just based on this price action. I'll have a quick look at the euro, although it's not doing an awful lot. It's done the step up thing. So we've been talking about this. We made the low, then we came up, and you want to see where, if it's going to hold again or go back to that low. So it's done the step up here. So this is the area that's important now. 102.70s, which again is another historical level. I won't show it. You can stick it on your chart and have a look, but go into something like a daily and you'll see it goes all the way back. So we've had messing around. We've got back above it and we can't get back below it. But again, bounce looks very, very weak. Okay, so I'm not saying this is going to go all the way up, but if we have another hold here, then maybe we get a move up to 103.40s. Otherwise, if we keep bouncing very weakly and we keep coming down here, then there's every chance we're going to break and maybe go and have a look at those lows again. A bit like the situation in the Aussie dollar as well. I'm certainly not looking to buy the euro. I think this one's in for more pain in the early part of this year. But keep an eye on those inflation numbers. If they continue to remain sticky, signs of the ECB going on a pause will probably give this a little bit of a bid, a bit like we saw with the Fed and the dollar. You're on holiday with gold to reg. Yeah, I think that's a bit sensible. It looks a bit listless at the moment. Right, so yeah, we have got this US holiday. Stocks are closed, bonds are on half day. So unless there's stuff going on in the rest of the world, Mr. Trump decides he wants to interrupt the day of mourning with some truth bombs, it's probably going to be a quiet afternoon. Okay, so might be a day to go and do some paperwork or something. But tomorrow it will ramp up because obviously it's NFP, as Gavin says. So yeah, and again, it feels like a month already. This week is always a difficult week. First full week of the new year. There's a lot of positioning going on. You know, a lot of people just coming back to markets, getting their positions back on. So you can't really, I never trust anything that happens in the first week of the year. From next week, again, as Gavin says, we probably might get a clearer indication of what's going to happen. Are the trends that we're seeing this week going to continue? Is this what the market's setting itself up for? And then we're probably going to take a bit more focus in the upcoming central bank meetings. And what it means for that, and obviously Mr. Trump coming into the hot seat. So enjoy the rest of your day, folks. Have a good one. We'll be back bright and breezy tomorrow, and we'll go over all the NFP and the Canadian job stuff to come, and see how much the UK is blown up by tomorrow. Have a good day, everybody. Take care. We'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.